this is Carol Eddy, and today I'm interviewing Mandy Walker. Mandy is a certified divorce financial analyst. That's a CDFA for short. And the reason I wanted to interview Mandy today was to find out how she helps couples navigate through the divorce process. In my practice, I've worked with several women who, fortunately, been considering a divorce or in the process of the divorce. And as soon as that begins to happen, the first person I contact is Mandy for a referral to her because that is her expertise. And then I work with them after they're done with the paperwork and the divorce is final. So with that, Mandy, what I wanted to start out with is, can you explain to us what a certified divorce financial analyst is?
Yes, and thank you for the opportunity to talk to you today, Carol. So I think a lot of people don't know about CDFAs, but it's a qualification or a certification that's offered through the Institute of Divorce Financial Analysts. And that training is designed to help people to focus on all of the different sorts of financial instruments and accounts and learn how they get divided in divorce and what are the pros and cons of different ways of doing it. So it's really putting a financial lens on everything. Mm-hmm. It's not putting necessarily a legal lens on it, because I will say, when I work with people mostly in mediation, so when people come in mediation, they have an opportunity to structure the division of assets in a way that works for their family. And that might be very different than how a court would decide.
Yes.
So you have an opportunity to be a lot more creative and a lot more flexibility. And I think working with a CDFA, I can help provide the framework and help people to understand the pros and cons of different options that they're considering.
So could you give how to divide up the house and having cash available if you're going to use that as someone wants to keep the house?
Right. So, and that I was thinking is actually, it seems to have gotten more complicated in the last 2 years here in Colorado, because so many people are looking at hugely increased house values.
Yes.
So to help them understand what would it take to buy out the other spouse, and how would you calculate that buyout, which now a lot more people are asking, well, if I'm going to keep the house and then I already know I'm in a capital gains tax situation, can we adjust the agreed value of the house for the capital gains tax that I'm going to pay?
Right.
So, and then the other part, which I think was what you were getting at, is looking at the overall settlement when somebody is getting a buyout. It doesn't have to come in cash. It could come in retirement assets. But then the question is, do you have enough money for a down payment for a new house? So
right. And in a lot of examples, it's the woman who is wanting to stay in the house, and they're thinking, oh, I'll just take the house and he can have everything else. And the reality is, if you're going to split it that way, that she has to put a down payment in order to change ownership and qualify for a loan.
Right, right. So it's like helping people think through, what does it cost to do a buyout? Can I afford to do a buyout? Will I qualify for a mortgage? And then probably the fourth point is some of the logistics, because most mortgage companies won't refinance a mortgage while a divorce is pending. If you are receiving spousal support and you count on getting the spousal support as part of your qualifying income for a mortgage, the mortgage company wants it to be paid for, I think it's like 6 months, and for there to be at least 36 more months payments. So you have to figure in there that the divorce might take 3 months to get through the court, because it's a minimum 92-day process. So you've got to figure out how long, where does that put you in terms of being able to refinance. You may not be able to qualify for refinancing until at least 6 months after the decree.
Yeah, and I think that's really important for people to understand. It's not a simple process, and it's really helpful to have someone like you walk them through all the different options and how to structure it so it can be a win-win once it's all done. It's all done.
Right, right.
So with that, what would who do you think would benefit the most from hiring a CDFA?
So I think anybody who's thinking about ending their marriage, who wants to have a better understanding of the financial impact that divorce will have on them, working with a CDFA I can help you create like a financial balance sheet, a marital balance sheet, and then walk through what could a settlement look like, and then as part of that process, looking at your expenses each month. And actually, you'll know this, but it's oftentimes, it's not until somebody goes through divorce do they actually sit down and write down all of their expenses for the month. But by looking at that, we can figure out what are the areas that you're going to have to compromise on, and what would life, what can you afford to stay in the house? If you can't afford to stay in the house, or you're being bought out of the house, then where could you move to? What sort of rent could you pay? I work with couples as well in mediation. Either I'm the mediator, or I have other mediators that call me in specifically as a financial neutral, so that I can take their finances and walk them through what I'm seeing there and come up with different settlement options that would work for them. And I think also, I've also worked with one party who's received a settlement proposal, and they're asking me if I could help them assess that and say, is that a good proposal? Is the way that it's being set up in their best interest? Is there anything that they're not looking at?
Yeah, so I think it's really good to have a set of eyes. And I think one of the things that might be helpful for you to talk about is, and well, at least that I understand, and maybe a lot of people don't, is that sometimes attorneys don't know all these intricacies because their specialty is getting to the settlement, not necessarily dividing it equitably. Is that the right word?
Yeah, absolutely.
Yeah, and that's kind of your job, is to show whether it's going to be equitable for both parties, or if they hire you individually, you'll work on their behalf.
Right. So that, I think it comes down to a very basic thing about people. And I'm sure that, Carol, you're a financial advisor, financial planner, so I know that you like numbers. And how many people do you talk to that just say, I can't deal with numbers?
The whole reason they hire me is because they don't want to look at the numbers, and they want somebody just to tell them the bottom line.
So attorneys obviously have to look at numbers, but you'll find attorneys who are good with numbers and attorneys who aren't good with numbers. And it's the same as the population. So, and then when you get some other more unusual financial situations, like restricted stock options or defined benefit pension plans, that may be a situation where somebody's going to say, well, let's bring in a financial neutral so that we can really get their expertise. Buyout of spousal support options too can get very complicated. And even spousal support where you've got a base salary and a variable compensation. And Colorado has this wonderful spousal support guideline, but if the adjusted combined incomes are over $20,000 a month, then there's nothing calculated. So how do you structure spousal support in that scenario? And there's variable compensation and base compensation. Those sort of structurings can get complicated. And then somebody wants to do a buyout of that spousal support, even more complicated.
Right.
So it always helps to have somebody else looking at the numbers and verifying them, or even saying, well, have you thought about XYZ?
Well, it also makes you more cost effective than an attorney because it's your specialty and it takes less time for the client to get to back to the bottom line, which is what we were both talking about. They generally want to know.
Right. And I'm often producing like a spreadsheet and a set of notes that explains everything. And I think that that means if I'm working with only one party, or even if I'm working with a couple, they both have documents that they can take back to their attorneys that clearly set things out.
Yeah. Yeah. And just makes it easier for everyone involved.
Right.
So when the best time for someone to contact you as a CDFA?
The sooner the better. I'm going to say, you know, if you've signed the dotted line, it's kind of too late.
Right.
Then right. And then, you know, and if you are under pressure to sign the document, then you're putting me under pressure to look at something in a tight time frame. And I would say I probably prefer not to have that pressure. So as soon as you start working in the divorce process, to get a CDFA on board, and you might not quite have all the information that you need to give to them, but like I can tell you, we'll make sure that we get a statement for this plan, or these RSUs. I need to see what the vesting schedule is. Can you make sure you ask for the vesting schedule and not just the number of units that they currently have? That, you know, so I can help them identify what other information that they need. Because I think also what we're really trying to do is to make sure that our clients make informed decisions and they have the right information to make those decisions on. So the sooner you can involve a CDFA in it, the better.
Which is why when I hear somebody's even contemplating it, I'm going to refer them to you because well, we've had great experience with that. So
yeah.
I
the other
think
thing is, like, too, if you are getting through negotiations and then you bring in a CDFA who says, you know, and right now I was just talking to a client this afternoon about he's thinking about buying out the house, but he might not stay in it longer than 18 months. And then saying to him, you know, that financially might not make sense because
right.
if you refinance the mortgage and if you're doing a buyout, you can't, you're not required to take into account the realtor's fees. That means that you're looking at a big expense in a short period of time that you're not going to recover.
Right.
So if I come up with those sort of concerns when you're already a good way through the negotiations, I'm not saying you can't go back and renegotiate it, but it increases the frustration.
Right.
When the other party thinks that they're pretty much done and you're saying, oh, wait a minute, I've had second thoughts. I want us to go back to this square. So the sooner the better.
That's great. So if someone were to come see you, can you kind of briefly walk us through the process of kind of the steps they have to go through so they know what to expect?
Yes. I always like to, for me, you have to end up with a picture of what the overall finances look like. So that is our goal, is to create a marital balance sheet. So I will have them start gathering data as much as they can about their finances. And I do, fortunately, and perhaps surprisingly, find out that most people do know about their finances. If you don't know about it, then you're going to have to wait until the actual formal legal process has started, and then you get the financial disclosures from the other party. But gathering all of that information, and I look at it separately, like if we are looking at being able to, what you can afford, the financial impact on your monthly expenses, then you need to focus on your expenses, and you can gather your expenses then. But then the division of assets is separate. So that's where I'm looking for bank statements, credit card statements, valuations of cars, 401ks, retirement assets. those type of things. So with that, I can create this marital balance sheet that says, and part of that conversation too, we talk about if there's any separate assets, like things that were acquired prior to the marriage or inheritances, and we can strip those out from the marital assets. But you end up with this picture that says, here's the amount of the marital assets. And now if we put this in your column, this in your spouse's column, and here's where these two numbers are, what does that look like to you? How does that feel? Colorado is not a 50-50 state. That's one of the common mistakes that I find people come into mediation thinking it's 50-50. It's not, it's an equitable division state. So, and then of course people say, well, what's equitable? And I say, well, it depends on what you and your other spouse think is equitable. But I've just worked with clients who've been separated for 5 years. So their assets are still marital, but it's not equitable to divide them as of their current value because they've been living apart for 5 years. So you look at some other division that takes into account the fact that there has been a 5-year separation. I think that marital balance sheet, even for people who don't like numbers, it spells it out for them. It really is like a picture, and it's most of the time it's one page, and it just spells it out, and it makes it much easier to understand.
Yeah, and I think when you said it's really looking at columns, like now that we have everything and we put it in columns, and then asking them, how does that look to you? Does that seem equitable? And then you have a spot to work from once that snapshot is taken and put into that format. I think the issue is most people see the asset sheets without you, and they don't have any idea how to split them.
Right.
You can put that into and say, okay, well, here's what the bottom line looks like with this scenario. And do you want to make adjustments to that?
And then they might say to me, okay, well, if this was the settlement, what does that mean for the rest of my life? And that's where I'm going to say, call Carol. Because I can do all of that division of assets, but I don't do projections through retirement or investment profiles or investment strategies. And so you have the tools to be able to take that and model it and say, well, maybe it would be better in the settlement, instead of having this much in retirement, if you could get more cash, it would give you more of a cushion.
Yeah. And yeah, I just wanted to, I think we've talked about a lot of some of the complex things that can come into play. Is there anything else that you think, or mistakes that you see people make when they don't use a CDFA?
Well, I think a very common area of misunderstanding is around what is a marital asset. And people tend to come in and say, well, this is my bank account, it's in my name. This is his bank account, it's in his name. But it's like, they're actually both marital assets. Just because it's one person's name on it doesn't make it their asset. And I think that that's something that people get confused about, and especially people who perhaps haven't really melded their finances over their marriage. They're kind of like, well, we kept separate bank accounts. And it's like, yes, but they're still marital assets and you still have to disclose them to each other. So I think that gets confusing for people. I think it's also confusing for people that not all assets are equal. And that's something that I talk to people about, how $1 of house equity is not equal. It doesn't equal, it's worth more than $1 of retirement equity. So when you're looking at that settlement option, if you're trading house equity for more retirement, there's got to be an adjustment for the different tax treatment of them. So that's a consideration that most people, I think a lot of people don't think about. Mm-hmm. And then I also find pensions, defined benefit pensions, and PARA is a big provider here in this state, and they send out these statements with cash values on them. And
yes,
people don't understand that the cash value is not the value of the pension.
Yes.
Because it is simply what they could cash out today.
Right.
But if they truly have a defined benefit with this stream of payments in their retirement, that pension is worth a lot more money than what the cash value says. And that's usually an eye-opening conversation for people.
Well, and I agree that those statements can be very confusing and people don't understand. And often the reality is every person has to call para to find out what their plan is and what their retirement benefits are going to be, because they've made a lot of changes and people are grandfathered in. And so, yeah, that comes into play also. And you just have to know where to look. I think it's really what it comes down to.
Right. So oftentimes I'm saying to people too, and again, especially with para, is this a 401k or is it defined benefit? And that's like the first step to understanding what it is that they actually have.
Okay. And where do your limits probably aren't the right word. Where does your role end and where does someone else start, like an accountant or someone like me as an advisor?
Right. So oftentimes I will work hand in hand with clients' accountants. I don't usually talk to them directly. The clients are going to them, but I'll say, can you check with your accountant on what the cost basis is for your house? A lot of people don't know what their cost basis is, but if we're trying to look and see what the potential capital gains is, we need to know what the cost basis is. So I'll ask them, accountant. The other reason to talk to an accountant is tax filing status, and your tax filing status is determined by your marital status on the very last day of the year. So always by July, August time, I'm asking people, do you want to be divorced before December, or do you want to file married for this year?
Mm-hmm.
And so talk to your tax accountant about the impact the filing single this year would have on your taxes. And I find most people, even if they're ending their marriage, can be united in the quest to pay as little money as possible to the US government. And then as I said, for people who want to know what is my life going to look like after divorce, that's when I need to hand them over to a financial advisor and say, this is where you get to do your magic about showing them what their future is going to look like, and whether and how much of a house they can afford to buy, how often can you replace your vehicle.
Right. And then for my role, it's, once a settlement goes through, what is life going to look like? And do you need to earn more income? What's retirement look like? All those questions are kind of like a new starting point. Just like you take a snapshot, we have to create a new snapshot after post-divorce and where they want to go and how to get there. So I love that our jobs are so complementary.
Yes. Yeah. Sometimes I'll work with the financial advisor during the process too. Like, depends on what's in the portfolio, but I like universal life policies or annuities that have cash values and cash surrender values. It's really important to understand that what is the cash value and what is the surrender value when you're looking at the equality or the equity of the assets that someone's getting, because you want to make sure that they're not taking something on that has a 10-year surrender charge on it, which means that if they liquidate it, they're not going to get the amount that's on the spreadsheet versus their spouse who's getting that amount in cash. And again, understanding what is the cost basis on that policy. I find sometimes the statements from insurance companies, and it's ironic I would say this because I spent 20 years working for an insurance company, but they're not always clear on things like surrender value and cost basis. And I'm like, gosh, I wish they put that on there.
Yeah, and I bump into that every day. So that's part of my role, is to figure all that out. Mandy, I want to thank you so much for talking to us today about what it means to be a certified divorce I did it again. Certified divorce financial analyst, and how you can help in the process of anyone who is looking to get divorced or is in the process, hopefully in the beginning of the process of divorce. Like I said, I'm very appreciative of the work you do with people I send over your way and vice versa. I think it's just such a great complementary. We have complementary jobs, and it makes it fun for both of us, I think. I think a lot, like you said, a lot of people aren't aware that your services exist. And so part of my role in doing this interview was hopefully to get information out so that more people know where to look for this information. And speaking of that, if someone had more questions, how would they contact you to set up a time to talk to you?
Yeah, you can contact me through my website at mandywalker.com. And there's a contact form on there. Send me a message, and then I will send you a link to my calendar, and you can schedule. I'm happy to talk to anybody. 30-minute complimentary conversation. I'm happy to do that. And I think what you were saying about our complementary skill sets, I think it just really underscores that it really does take a team of professionals to help manage a divorce well today, because it just seems it's a little bit more complicated than what it used to be.
Yes, and I'm very happy I have you in my corner because I've been so thankful to get information very quickly for anyone who needs it. So thanks again, and thanks for doing this interview. And obviously, if you forget how to contact Mandy, you can always contact me at my website, or just send me a message. My website is moneyconcepts.com/Carol Eddy, and email is ceddy@moneyconcepts.com. So hope you guys have a great weekend. This is a Friday for us, so we're ready to head out and relax for the weekend. So hope everybody else has a great weekend. Take care.
Thank you.